Hello, this is Mike Swanson. I run the website wallstreetwindow.com, and I want to go over a couple interesting charts with you, some observations about what is happening in the markets and where I think the trades are where there's the best potential to actually make some money. A lot of people are getting into trading for the very first time. There's been a slew of people, hundreds of thousands actually, opening up Robinhood accounts to put in trades for the very first time, attracted by the market volatility and the now ease of doing trades on your phone, on an app, with free commissions. But last week on May the 7th, actually it's now been over a week, I did a video about something that was happening with the S&P 500. The 20-day Bollinger Band indicator was squeezing. Let me show you this on a chart. This squeeze is still in play. The bands are the pink lines above and below the candlestick charts. The indicator on the bottom, which has been falling for the past couple weeks sharply down, measures the distance between the two bands. So that indicator declines as the bands come closer together, as the bands squeeze. Now, why is this significant? What these bands measure is the price volatility in a chart. When volatility increases, the bands widen. When volatility shrinks, the bands come closer together. And obviously in March, the bands went very wide apart because we had one of the sharpest, quickest market declines ever. In fact, at one point, the stock market was falling at a quicker rate than it did during the 1929 stock market crash. Extreme volatility and declines don't last forever, and even if you're in a bear market, there will be a snapback counter-trend rally. Just as during bull markets, there are corrections that happen from time to time. So the market had a sharp rally, and then a few weeks ago, that rally sort of lost momentum. Now, every single day, the market seems to have a big gap up or gap down. This Monday, we had a tremendous gap up. And then yesterday, the Dow fell close to 300 points going into the close. This morning, it's gapping up again. And these big opening moves or even daily moves, that's what captures people's attention. Especially when you load up an internet website, boom, that's what it's the daily news, right? Or if you look at an app, that's what you see, that big daily price swing. But when you look at a chart like this, and you look at the Bollinger Bands, what they show you is putting these short-term moves into context with what is really going on. In that context, those underlying trends are really the most important things. So the Bollinger Band started to come together 2 weeks ago. I did a video making note of that. And what that represents is a pause in the market where volatility overall shrinks over the course of a week. Now, more than a week. And typically what happens is that will become a prelude to an increase in volatility, which represents a sustainable move, not a move that just lasts for a couple hours or a morning and so forth. And I don't think that move is starting today, but I think we're going to see it begin before the end of this month. To put all this to you another way, at the moment, the S&P 500 is locked between two levels, a resistance around 3,000, support at 2,700. It could stay locked in that range for the rest of this month. There are stocks that are doing much better than the S&P 500. I'm going to point a few out in a few minutes, but there's also many stocks doing much worse. And basically, you want to be if you want to beat the market, you want to be in the stocks and the sectors beating the market. It's as simple as that. If you're in lagging stocks, that's bad. Especially when the stock market dips, those stocks tend to drop even more. So if we go and turn to this screenshot, what you see here is Robinhood has an interesting thing. They show you the top 100 most owned stocks by the number of people who own them. So it tells you what Robinhood traders are doing. And as a whole, they tend to actually not do very well in the markets. They don't really have a lot of experience, and they tend to kind of get in at the wrong time, I guess I should say. But what's interesting about this is notice Aurora Cannabis. That stock had been number one for over a year. Actually, I opened up this Robinhood account about 2 years ago, and now I just have it to monitor this, basically. And when I first opened the account, Apple was the number one most owned stock for well over a year. And then starting in the first quarter of 2019, ACB displaced Apple, became the number one stock, and remained that way until just a few weeks ago, in which ACB dropped and airline stocks experienced a surge of buying and interest. Up until March, there wasn't a single airline stock in the top 100, and now there's multiple ones in the top 100, and so many people have been buying them that they have now displaced ACB. Now, I think this is all a big mistake, and let me show you why. Take a look at this chart of ACB. I've circled the period of time in which ACB experienced a flood of buying into the stock. It became number one. And what happened was ACB actually had been declining for several years, along with cannabis stocks in general. And there was a little bit of a dip in the stock market, and then ACB jumped. And that jump in ACB in the first quarter of last year brought buyers in, because what happened was ACB was experiencing big daily price gains. That attracted the attention of a lot of Robinhood traders. And they also knew that that stock had at one time in the past been at a very much higher price, because cannabis stocks were super hot in the markets from like 2015 to 2018. Then they had a huge decline. So people were trying to guess the bottom, and it did rally, as you can see, up to 110 just about, but then it plunged after it peaked in the summer, and it's fallen over 95%. So during, to make a long story short, the first quarter action brought all these people into the stock, and then they experienced declines in it of over 95%. And what's really crazy is they sold finally about 3 weeks ago, and that caused the stock to drop down the list. And then right after they did that, the stock has now doubled 100%. So horrible timing among these Robinhood account holders. But let's look at airlines with the Jets exchange traded fund. You can see this fund has declined, and then it did bounce off of a low, but it's still way off the highs. But that bounce created several days of big price gains in individual airline stocks. And just like ACB did in the first quarter of 2019 with a series of big price daily gains, that action in the airline stocks attracted people into them trying to guess the bottom. At the same time, Warren Buffett liquidated his entire position. Now, who's right? I would assume Warren Buffett knows a lot more about airlines and than people just watching these gyrations on these apps do. In fact, the airline industry is not going to recover for quite some time. They are expecting, already the passenger traffic on the airlines has plummeted to less than 10% what it was before March, and now they're going to create all sorts of security increases, health increases at the airlines. That's going to make this a situation that's going to last for quite some time. There's not going to be a pickup to where we were a few months ago for airlines for 2 or 3 years. So this is an industry not simply in a stock drop, but in a depression. Even if the U.S. economy gets better, the airlines will be now one of the last things to fully recover. There are going to be airline companies that go bankrupt. These are not good investments from a fundamental perspective, but from a chart perspective, this is also the case. As I said, if you want to beat the markets, then you want to be in the sectors and the stocks beating the markets. Look and see that blue line on the chart. That's the 50-day moving average. Jets is below that indicator. It's below the 150-day moving average. It's below the 200-day moving average. It's not only below all these key long-term moving averages, but it's horribly lagging the stock market. That means when the S&P 500 has down days, airline stocks typically are falling more than the averages do. And I think that's a situation that's only going to continue going forward. So what do you want to buy if you want to beat the markets? Well, take a look at this. This is a chart of Newmont Mining. Notice that it's recently made a new high. It's done that when the S&P 500 is still below its 200-day moving average. And look at the indicator on the bottom of the chart. This is a ratio, Newmont divided by S&P 500. It's a relative strength ratio comparing the action in Newmont to that of the S&P 500 stock market index. This ratio goes up when the stock is performing better than the market. When the stock performs better than the market, typically it will go up more than the market does and down less than the market does. That's how you make money, as you get into situations like that. And notice in March that relative strength indicator did not go down. Newmont fell less than the S&P 500 did. So surprise, surprise, it has since surged much more than the stock market did too. This is a much better thing to buy than ACB, much better thing to buy than Jets. And an interesting thing about Robinhood is that it is not in the list of top 100 stocks. In fact, no gold stock ETFs are. There's only one single gold stock in the list, and it's way at the bottom. So, look, stocks go up when people buy them, and they tend to top out when all the people out there that might buy have done it. And since so few people have bought Newmont or other mining stocks on Robinhood, that tells me that the small player, the small investor, the small trader is not yet in mining stocks. So buying now is still buying early into the game, and you're also buying into something in a big uptrend, in a sector in a big uptrend. Yes, I own Newmont Mining. Yes, the stock is overextended, and I do think there's individual mining stocks that are actually at better buy points right now. Look, the top stock pick I had for this month, which was the same one I had last month, it's a small cap mining stock that completely exploded in value. It has already more than doubled in 8 weeks. And if you are on my email list, you know about it. If you're not on my email list, then what you want to do is get on the list so you'll know about that stock. And there's going to be another one, a new one in June you're going to find out about too. So click the link associated with this video, get on my email list, get my email updates. Typically they are every trading day before the market open, and it'll help you be abreast of everything that is going on. But remember, daily price moves are not that important. What happens on the bigger trends are what are key. Indicators such as the Bollinger Bands help us navigate that. Moving averages help us navigate that. If Bollinger Bands are new to you, go to Wikipedia, type Bollinger Bands, and just read about them. I'm not doing an entire video about them here. I want to give you an overview of several of these charts so we can see what's happening in these markets. So anyway, if you're not on the email list, remember, click subscribe. Also, subscribe to this YouTube channel. Get the video updates. In fact, smash that alarm bell that you see if you're watching this on YouTube, and then they'll give you the little notification when the next video is posted up. And like the video too. I like knowing that you're out there. Leave your comments if you got questions, and I'll be talking with you later.